Hello, uranium friends. We are back with episode 15 of Uranium Talk, talking all things uranium. I am Jungle Funk from the Chart Guys, joined here by Chris Red Devil. Chris, how you doing?
I'm good, Joe. How are you, sir?
I am doing well. It is Super Bowl Sunday. We're getting this recording done around 1 p.m. And
Yeah,
yeah.
bro, you're cutting into my absolute personal time. I got like 50 people coming over.
All right, well, we'll make it a quickie for sure. No
So
way we'll accidentally talk for 30 minutes.
now it's not possible. We don't do that sort of thing.
What do we got? We had a exciting week fundamentally in the uranium
Dude,
space.
it's just an insane week this week. We're gonna bang out the news. We're gonna link the stuff in. And you all know we're more technical traders, and there's everybody under the sun talks about the same stuff here. So, but we will review it. So first things first. Um, the carry trade. So people know what the carry trade is that are following the space. Um,
If
you
they
know,
don't, can you lay it out for us real quick?
yeah. Well, the carry trade is basically there are traders out there, trading houses. The big one is the Japanese house. They just buy and sell physical uranium. So we've seen the dynamic with the month. We call it the month end smash, where this Japanese house would sell out of their positions and they would knock the spot price down. So the carry traders were a big part of the spot market and the amount of uranium that was on it. And so utilities were going to carry traders to fulfill their needs as opposed to going directly to producers. So, for example, and this is just information that I've gotten from the Uranium Insider. So he was talking about it in one of his videos this week. If you're not a member and you want a good fundamental backdrop, that's what you can get that out of Uranium Insider. But regardless of that, so the carry trade in 2021 was approximately about 22% of spot. Okay, so for 2022, it's 5%. So there's been a huge drawdown in carry trade. So what does that mean? Well, it means that maybe the utilities need to start going to the producers to secure their pounds. That's the significance of the change in the carry trade. That's something that we monitor lightly. We're more technical traders, obviously, but it's there. And this is, again, the overall thesis is the supply demand model. The supply side was getting, was holding up nicely because partly because of carry traders. So if this dynamic continues where the carry traders are doing less and less spot market, that should transfer over at some point to producers. Time will tell. It's just something that we have to take a note of. So that's the carry trade. Japan has unequivocally said they're doing their restarts. They're extending the lives of their existing reactors. They're restarting some that have been mothballed. Maybe they're going to start building more. We don't know fully yet, but Japan is big, right? So Japan,
Yeah.
after Fukushima, Japan was flooding the market technically with all of their unused inventory. There are some players out there that are saying, hey, they never really sold it. They only loaned it out to all these other entities. If that's possible, maybe they're looking to start securing their pounds again. Japan likes that carry 10 years of inventory, somewhere around there. So we could see that kind of putting more pressure on the demand side. Time will tell, but it's a really good sign. Now, if anybody in the space doesn't follow Rick Rule, I'd be very shocked. But B, I mean, this is a recent interview that he did with, I think it was Commodity Culture, and we're going to link that. And Rick Rule said, he's, one of the big things for him was the Japanese restarts. And he's basically said, I didn't know when they were going to be happening. Now I do. It's 2023. So another good thing for the bullish thesis, it's still following the roadmap that we've been laying out for years, basically. So Japan, pretty significant. CCJ had their ER. There were two major things with CCJ this week. Earnings report, which has been received positively, and we're going to link that. But they also had, and we'll link this as well, they also had one of their biggest nuclear fuel contracts in the life of that company. So, there's people that are kind of, and if you listen to the CEO on his conference call, and there are people who are complaining because they're kind of controlling the spot market through their long-term contracting. And if you start to study long-term contracting, you will see that they're doing floors and ceilings on the uranium. So they might have a ceiling price of $75, or they might have a floor price of 45. Whatever those contracts are, that's what they're doing. So people are complaining about that because they might be holding down the spot price a little bit. It's possible, but what we as traders, what we as investors in the space look at, CCJ has just kind of had a really good earnings report, and they've just kind of had one of their largest contracts ever. So it bodes well for CCJ, bodes well for the space, bodes well for uranium in general, bodes well for the supply demand dynamic.
And the charts actually showed that this week, fending off.
Did. I mean, look at the price action on CCJ. I mean, they've had, it's been straight up for what, 9 weeks, 7-8 weeks, or whatever it is.
Yep.
So it's there. I mean, people see it. Yellowcake, which is the London equivalent of Sprott. So they have exercised their contract with Kazatomprom to purchase pounds. Now, Yellowcake is just another fund. It may be structured differently than Sprott's is, but they buy uranium and they hold it in their trust. So they bought pounds. They had a contract with Kazatomprom. They bought pounds to the tune of, I think it was around $48 a pound. Don't quote me on the exact number. It might be 48.51 off the top of my head, but they're buying pounds. So again, taking more uranium off the spot market, right? So all this starts
sending
to make
it to
sense.
the graveyard.
Yeah, you look at the carry traders. They're slowing down to the tune of 17% differential between 2021 and 2022. Now you're looking at Sprott. Now you're looking at ANU, which is Kazatomprom's arm of a trust, and now you're looking at Yellowcake. They're all pulling pounds, and we don't even know what China's doing. So, UROY, Uranium Royalty Company, the only uranium company royalty company in the space. So they also purchased 200,000 pounds. I think it was $51 a pound. I'm almost positive. Let me just see that. Yeah, $51 a pound. So they are also buying uranium. So, and they also announced a deal, an offtake deal with Anfield Energy. Now, I've talked about Anfield Energy a couple times in the room. It's a highly speculative play. They are in the United States. They do have a milling agreement. They are one of the few licensed operators in the United States for milling. So worth it to keep an eye on. Basically, all I'm doing with Anfield, by the way, is every time it gets to like 4 or 5 cents, I'm kind of grabbing a chunk, little piece, maybe 5,000, 10,000 shares here and there. That's what I'm doing. Building a little. That's going to be my speculative play for this longer term run. But listen, UROY, Uranium Royalty, has faith in Anfield as well, right? So they've kind of put their money where their mouth is there. So
what's the ticker for Anfield?
AEC on the TSX and ANDLF on the OTC. Let me just double check the OTC ticker just to be positive about that. ANLDF. Yeah. So good to keep an eye on them. Listen, any liquidity crunch, it's dead money. So, I'm dropping money into Anfield expecting a zero. So it's not like I'm buying 1 million shares or anything like that. That's what I'm expecting on that. But I have posted that up in the room before. What's next? We're going to post this interview as well. There's a guy called Warren Irwin, and he is the resident bear in the space. Meanwhile, the guy's made $100 million on NextGen, but he is the bear voice in the space. So when I'm really bullish, I want to hear what the Bears have to say. When I'm really
Yeah.
bearish, I want to hear what the Bulls have to say. So it's important for us to at least point this out. We're going to link in the interview. He's been saying it for a long time. He's been talking about that there's some unknown warehouse somewhere in Africa that has 1 billion pounds of uranium sitting in a shed somewhere. He talks to some of the stuff makes a lot of sense, and it's good to listen to his interview. He talks about the uranium juniors and all these fly by night Johnny come latelys that will start entering the space with a uranium name, and we see that in many sectors, and it's actually starting to happen in uranium. So he's slightly bearish on the space. Look at the interview. You decide what you think about that, but it's our job to at least inform you of it and that there is this guy. So we're going to link that as well.
Yeah, and really any time in trading, you don't want to be just searching out information that confirms your bias. You want to be searching out information that challenges your bias and see if your thesis can hold up against it. So always keeping an eye on the opposite side of the trade, see who you're battling against.
Yeah, and no question. And this guy, he manages a fund in Canada. It's not like he's some small retail bloke that just puts memes up on Twitter or something. The guy
Yeah,
actually runs a fund, and he's probably, I don't know what the assets under management of the guy of what he does, but
a lot.
if you made $100 million on next gen, the guy's moving money. So
Yeah.
whether you sit there and you say, oh well, he's just talking his book, that's for you to decide. It's just there's one of the lone few uranium bears in the space, so I pay attention. That's all I do. Again, I get guided more by charts and price action and whatnot. So, but you make that decision on your own. Following up on the EU proposal to ban Russian uranium and oil, haven't seen any news. That's still out there. And the House has come up with the bill. And where it is in the legislative process, the House of Representatives of the United States with the Russian ban, where it is in the legislative process, we still don't know. They've provided for waivers, being that some existing contracts that might have been made like 5 years ago, they have up until 2026 or 2028. You can look at the bill. We posted it up last week. There are waivers in place for companies. Listen, the utilities do not want this to happen, right? So Duke Energy and all these guys, they don't want it to happen. Why? Because they know that if there's a ban, the price of uranium is going to, move up. It's not going to move down. So it pays to pay attention to that as well. But that's it for my review of the week on the news.
That was a heavy week, and
yeah, man,
really
heavy.
just more positive stuff coming in.
Yeah, we can dig into Cameco. We could spend an hour on this video talking about it, but it's not what we need to do. You guys understand this is, everyone knows about it, so you make your decision based on it.
Yeah. All right. Well, let's get into some charts then and check things out. And we will start it off here with the S&P 500. And after a couple months of bounce here, we're starting to see a little weakness. So that's obviously something that we need to keep an eye on, as the market tides of the S&P 500 affect everything. So when we look into the daily here, we can see we do have a daily downtrend for the first time since back here at the beginning of the year. So that's setting up the scene for the potential that we get some weekly consolidation going on under just after breaking this resistance. So that's not the best look, but we'll have to see. If consolidation remains healthy, then it's fine. So from the broad market perspective, what bulls want to see is rotation. So I'm not going to get too into this other stuff, but when we look at the healthcare sector, which is a top 3 holding in the S&P 500, it's been going down while tech has been leading the way up here. So if we start to see tech come down and healthcare go up, then that's a good look for the markets as a whole. So we'll kind of be keeping an eye on that and seeing, do we have money leaving the market with all of our major sectors going down together, or are we going to continue to see rotation? So that's the S&P 500, and we can say that we'll get a fib on here just to get an accurate level. If we lose like the 3,990 level, which is essentially these weekly EMAs, then would verge on the side of unhealthy, and we'd have to be a bit more protective. But for now, it's not even underway. We'll need to break the low of this week next week to see that weekly consolidation, and then we'll just track the health. We'll let the daily downtrend be the guide, just how we let the daily uptrend be the guide on the way up, and we'll see what we get. So keep an eyes on that. We've got the dollar to be keeping eyes on, as well as bigger picture. We watch for the potential of this monthly high or low. So going into next week, is the dollar going to confirm a daily uptrend, which would be its first daily uptrend since back here in September? Is that correct? Yeah, we've had some strong counter bounces throughout, but no daily uptrends this whole time. So that obviously would provide a headwind for assets across the market. So keeping an eye on that. Now into uranium stuff. So this URA SPY ratio chart, we'll start on the monthly. Watching this monthly EQ as we talk about every episode. And we saw a pretty good pullback off of the top here. And it was looking like pretty confidently our monthly lower high was looking to shape on up. But this bounce and relative strength in the uranium space over the last week has us holding our EMAs. So we can now say, we'll zoom in once more to the daily, that this low of Monday is the absolute key level on this ratio chart. And what bulls want to see is a daily uptrend reconfirmed. So bears got their sucker punch in of the big move down, but at this point, bulls are creating enough room for a daily high or low on this ratio chart. So I'll be talking about these lows of Monday and Tuesday. Some names it's Monday is the low of this pullback. Some names it's Tuesday. But those are now the vital levels for bulls to remain in control on pretty much all of our names. So that will keep the analysis pretty quick here as we look to see, ultimately, bigger picture on everybody. Are we going to stay range bound, or are bulls going to be able to go up and challenge resistances? Some names are closer than others. But once you get up near resistance, you really got to just pull out your monocle and keep a close eye for any signs of bear action. And we saw a little sign of it with this big pullback of relative weakness. But then this past week, with the broad market week, uranium held on well. So that is something to watch. And it's notable. And we also saw XLE get a daily uptrend and set its weekly high or low. Not officially. We'll need to break the high of this week next week to do so. But that's what we want to see, is if the broad market's going to come down, we want to see rotation. And we're seeing rotation back into energy. Uranium correlates with the energy sector, so that is a good look there. Let's look at CCJ. So big old gap up on earnings, and bulls are holding on well right now. Certainly Thursday, we'll go back to the S&P 500. That was our really strong bear day there. So we didn't really see a ton of follow through on CCJ. But as we've been saying for quite some time now, daily 12 EMA guide, daily uptrend guide, and now this low of Tuesday is the key level. If that were to be lost, then it'd be looking like a monthly lower high could be shaping up in this tightening range. But for now, there's no sign of that. So next time we consolidate on the daily, we'll be watching the daily 12 EMA. If that holds the support, the show goes on. And CCJ is certainly the strongest of our major miners. When we look around elsewhere, UEC.
Before you go back to CCJ.
Yeah.
I mean, I've sold a lot into all this, but the way I'm seeing it right now is that if it comes here, I'm probably going to be adding, and I'm going to work right off this level.
Yeah,
It's just that simple.
It really is that simple. There's all these metrics and indicators and correlations and all of this stuff where you can make trading as complicated as you want. But at the end of the day, a lot of times just the simple stuff is where the money's at. So
I mean, literally, just like you said, just like we've been talking about, EMA touches, on the daily over and over. And what happens after those EMA touches? It makes a nice little move. So why not just play it the exact same way? Get the
Yeah,
EMA touch, and you've got a perfect, beautiful level to work off of right below it. It's a low risk entry.
yeah, it works until it doesn't.
Yeah.
It works until it doesn't, and when it doesn't work, you need to take note and get out of your trader position there. But it works until it doesn't. So we will see how long we go as you get up into larger time frame resistances. It begins to shift the odds that perhaps it will stop working here. But that's why you manage your risk. You don't just enter and plan to be right and assume that it's going to keep going up. That's what stop losses are for. That's what risk management is for. And at this point, we're watching 31.29. Can bulls get up and over, or do they tighten up? Nobody knows. We'll find out. So, on the note of EMAs, we'll go to UUU next. And we were talking, if we get some weekly consolidation, as long as these weekly EMAs hold, then that move remains healthy, and we're well above them here at this point. So we lost the daily uptrend, but very little follow through. So now if bulls can regain a daily uptrend from here, then we would see a weekly higher low set. And if bears can confirm a daily downtrend, then we'll have deeper weekly consolidation. So the ball's really in anyone's court at this point, and bears, after this big old move up, certainly would have wanted to see more downside when the market is finally showing its first sign of weakness in 6 weeks plus. And the uranium space is holding on. So we'll have to see what we get. Weekly EMAs, bigger picture, are the guide on all of these names. But CCJ, since it has relative strength, we're not even consolidating on the weekly yet. So it's just that daily EMA. So let's look around. URA, perfect tag off the weekly 12 EMA. And as far as the daily, it'll be the same deal as UUUU. Do bulls reconfirm a daily uptrend, set that weekly higher low, and keep the resistances of our larger timeframes in play here? Or do bears confirm a daily downtrend, lose our weekly EMAs, and then support being in this monthly tightening range for longer? URNM, very similar dealio to URA there. Daily situation is going to be exactly the same. Who gets the next trend in their favor from here? NXE, holding weekly 12 EMA. So we were talking about how it's a bit of a red flag to break these key resistances and not see follow through. But from there, bears need to compromise the weekly time frame. If we're talking about a monthly trend change and bull break, it's not seeing follow through. It's that smaller nested time frame within that, which is the weekly, that then needs to be compromised for it to be a red flag. And right now, we're holding weekly higher lows, we're holding weekly EMAs. So we will see who gets the next trend in their favor on the daily. So key support down here on all of these names is the low of Monday and the low of Tuesday, whichever one's lower. So for like NXE, we're looking at 443. That's the low of Monday. On CCJ, it's the low of Tuesday, 2707. On URA, it's another Monday low, 2159. And URNM, also a Monday low, 3439. So let's take a quick peek at UEC, looking at the weekly. So feeling more pressure on these weekly EMAs than peers, but still holding them, still well above our weekly higher low. And similar to everybody else, this low of now Tuesday, 375, is the important level. Who gets the next daily trend from here? That will be notable. And we'll pop in on U.UN, look at our weekly, and we're not even consolidating on the weekly here yet, and it will just be this weekly uptrend. So that key support is down here at 1566. Bigger picture. And as far as our shorter time frame action, the low of Friday is that key level. So that is 1626. And if bulls can reconfirm or actually they never even lost the daily uptrend. So we had a little daily uptrend confirmed here. Deep pullback, but strong bounce up. Bears wanted a lower high and lower low to see confident weekly consolidation, and they're not getting it. And right now, bulls are back up looking at our highest prices on this bounce. So that's pretty much all I've got there on the charts, Chris.
Good strength in the sector. I mean, it's holding up surprisingly well. So
Yeah, we'll see if they can keep it going.
it doesn't bode well for my uranium puts that I entered last week.
Yeah, well, that you're hedging other stuff, and if you're hedging, what you want is your hedge to fail. Obviously you want your
100%. Yeah. I mean, we talked about it last week. I think it was last week's video. You can go back and you can look at why I did my uranium puts and all that stuff. But that's the deal there. So we can talk about my trades?
Yes, sir. You've got the main stage.
Before we do that, let's just take a quick look at URNJ because we started following this last week and we're going to continue to follow it. I consider it an important ETF for many reasons. Most importantly for me is that because I trade around the core, this is my core. I am making URNJ my core, and then I will juice up the alpha inside with some of the names inside of it. Because it's just this bad boy is going to end up getting the liquidity and hopefully the volume for people that just it's not efficient to buy some of the smaller names in that this one holds. So, this could be a really good instrument down the road. We'll just have to see how it plays out. But what we do have, in the very least, right? We've built a little bit of a base that we can always be working off for the time being, right? So that's 1846. That's where it kind of started to find its price discovery, or whatever you want to, however you want to preface it. Joe will say price discovery is with the names within it, and that's fine. Okay, in my opinion, 1846 is kind of like the be all end all spot right now. So I posted it last week. We did get our hourly trend change, and then that gap up really got us our 4-hour trend change. So we had our low, our high, our higher low, higher high. So we're working on a 4-hour trend change right now. One could possibly say that if you want to tighten up, it's built a little bit of a base of support over here. So anyone who wants to, if I want to start adding, maybe my additional adds will be based off of this low here, which was 1893. It did make a gap, and we know that gaps like to get filled. So we'll see. But that's URNJ. We're just going to keep following it. We'll keep updating it, yada, yada, yada. So I posted this. I took an entry into Denison. I believe it was one of these days. I got in at $1.33. So on this pop, I took a piece off. I think I got my sale off $1.41 or $1.40, somewhere around there. So it's helped to make this this potential trade pretty much risk-free. So if it breaks down under $1.29, depending on what the rest of the space is doing, I may add back and decide that this is going to be my GTFO area, or I may just stop out. It depends on what the rest of the sector is doing at the time. But I did take a piece off of DNN, off my $1.33 entry. So I'm still running around about 60% of that trading position. I do hold a core. Majority of that is in leaps. SMR, I got stopped out on. Hold on, let me just put this up here. All right, so I was detailing that trade. It was my rebalance play. It was all in this chop. It did stop me out. I did get half off, and it was a stop out, and it was a risk-free trade. So that's done. Next Gen stopped me out as well, but again, I'm still holding a core, and I still have some covered calls sold against Next Gen. So yeah, I'm going to be looking to reload NXE. SMR, I'll probably be a little bit more picky about it. I hold the core anyway. So and a quick review on Encore. So as we know, I made a video specifically on Encore and Global Atomic. So Encore is still just chopping around in the zone. I haven't made any changes to those entries of traders, so I'm still holding them. And we're kind of waiting for the Alta Mesa deal to close, which might be it could possibly be this week or maybe next. There's some chatter out there that short interest has increased a lot on this name in the past week or so. So it'll be interesting to see how that plays out. But I'm still there. I haven't done anything with that yet. And Global Atomic, I'm still in those ads that I detailed in my video as well. My second ads have not hit yet. So I have a bid down here. Forget where the heck it was, but I said I was going to be about 10 to 15% below the deal price. So, and that hasn't hit yet. So I'm still in my global financing ads. You can look at my video on it. But that's it on my trades this week. I will be scouting. I'm definitely scouting UROY at this point. And I will post up what I do about that, if anything, this week. But that's all I got, Joe.
Right on. Nice maneuvering. It's always great when you can get a portion of a position off in profit and lower your cost basis. Like SMR, it costs you nothing to potentially reap great rewards. And that's just through some active trade management. And sometimes it ends up running and going, like your URNM trade last month, and you end up catching a banger, and sometimes you stop out break even, and then you just try again. That's the game.
That was like you a couple of weeks ago, right? It stopped me out. Maybe I was like 2 weeks ago, whatever, stopped me out and then proceeded to go on without me. But again, I hold course. So what's the difference,
Yeah, and when you're not losing money on these stop outs because you take a partial into profit, then psychologically it makes it really easy to just not care. So, all right, that's all I've got this week. That's all you've got this week?
Yeah, that's all I've got, sir.
Over and out.
This was a banger of a week, fundamental news wise, and CCJ, we'll see how it plays out. We need some broad market. We got CPI coming, no?
Yeah, CPI. Oh, good call. CPI on Tuesday. I believe it's the 14th.
So there is some trickery going on with that. I believe that once again, they've changed the metrics on how they calculate CPI. So we'll see how that plays out.
Yeah, definitely going to be keeping eyes on the broad market and this health of consolidation, because you can usually only fend off those tides so long. If we were to see unhealthy weekly consolidation, uranium space would be up against it. So for now, though, the show goes on.
The show goes on.
All right. Have a great week, everybody, and we'll see you next one. Over and out. Take care.
See ya.
Peace.